Good evening, everybody. This is John Locke from Locke and Your Success, LLC, with a trade update for February 1st, 2012. Well, it looks like the Russell 2000 broke out higher as expected, and we had a nice 2% move today. That was much higher than everything else. The Dow was up a little over 0.5%. The NDX was up about 0.8%, and the SPX was up about 0.9%. So there you go, and that's what the Russell's like. It usually outpaces everybody. We are coming into this resistance area, so I'd say anywhere from right around now to about right around 820. What I'm hoping is going to happen anyway for our positions is for this to come into here and break this lower trend line here so that we can get down into this zone and maybe close the month out somewhere between 770 and maybe 810. Okay, as for the positions, I started the day looking like looking like this. We had obviously way outside of our tent here, going negative theta, positive vega, and that becomes an issue. So what I ended up doing is I rolled the butterflies up to 760, and then to deal with the upside delta here, I ended up buying a 770, 780 call vertical. And now the position looks like this. In addition, I sold off. I'm starting to get a lot of money in this, and I only wanted to get like 7,500 in it. So in order to get my capital cut down a little bit, I went ahead and I sold off this 710, 740, which brings me back down to about 8,700, which is still more than what I want. And to deal with that, I actually have an order in. If you come up to our monitor page here, and this is just for the M3 account, by the way. This account, that's all I trade in it, is the website M3 account. I actually have this good till canceled working order in to buy this, to take my $55 deep in the money IWM call up to 74, and if I do that, that is actually going to take my capital in the trade right about down to 7,500. It's about 79, and that's pretty much in line with what I wanted. So that's the deal with this trade. As it stands, let's see here. The trade is down about $190. It should be down less, but I did get kind of beat up on this roll today. I ended up paying $11.50 for a set of butterflies this morning, and the value, if I checked, this really dropped out of them. Let's see. Yeah, they say the value is actually $9.58. So I lost about $2 in each of those butterflies. So here we stand. If the market backs into the range, that would be really good. If it does not, I will probably eventually end up taking the 760 probably up to 780 and reducing its size. Like I said, I'm kind of expecting the market to come to 820 and then pull back down into here, and if that happens, then we're all good. If it decides to keep going and wants to make a run for this 860 level, then we're in for a battle here. And and you can see here, this is expiration day. This line right here. If we hold channel, we're going to expire up around 840, which would be quite an impressive run for the Russell. Like I said, that's why we've been up so much. I wouldn't be surprised if we break the trend line and then end up in this little triangle somewhere for expiration. Okay, let's take a look at the other trades. The first thing I'd like to take a look at is the 55 trade by the guidelines, or the Bearish Butterfly by the guidelines. It was strictly by the guidelines. This trade is down 1860. I had to make a roll today. I had to sell the 760s off because the market, we were over 800, which was the price point for our roll. So I sold those 760s off. I rolled them up to 820, and this is what the position looks like now. It actually doesn't look that bad. If we stay under 820, this has a very good chance of actually making something. If we start going over that, it's going to be difficult. It may even max loss out, depending on how fast it goes there. If we get there right away, then obviously that's a problem for us. If we get there in a couple days, it's not that much of an issue, and we'll be able to afford to do that. But I'm hoping that the market stays under 820, so we don't need to do that. If we take a look at the one where I did the early delta roll, okay, I could. This is the one where I could see the delta roll coming, so I did it a little bit earlier than I did it with the 55-day. I mean, eventually, then I did it with the regular guidelines bearish butterfly. I saw it coming. I did it early, and this trade here is down only $1,200, so it's like $600 better off than the other one, which is much better. And I have the exact same adjustment points, which is going to be up here at 820, except I'm going to be down a lot less money, especially if it takes a little while to go there. And again, this one's in decent shape if we stay under 820. 55-day trade with all the modifications that I did to it. This is what the trade looked like prior to, or this morning, prior to open. Let's take a look. I had a 740 and a 760 butterfly on, and I also have two 740, 790 vertical spreads on it. I had just, let's see, about $2,000 over planned capital to do that. And the reason I did it was because I was trying to extend my upside range. I was basically waiting for the Russell to blow off to the upside, and it did that today. So since it did that today, and I'm thinking we top out around 820, 825, what I did is, towards the end of the day, we come in here, we sell these two butterflies off. We sell the vertical off. Then we go into the same position as the other ones. So I am now in the same position that I would be in had I been following the rules all along. The only difference is I'm down $795 instead of being down almost $2,000, or what was it, $1,800 or something on the one that went strictly by the guidelines. And I'm even doing a little bit better than what the delta roll did. So by judging the market, or playing the market movement a little bit, I was able to do that. If things hold out and looks like the 815, 816 level holds, this is going to be looking really nice. And if it goes up, I may do a couple other modifications to show you how to stay in one of these to maybe even a move to 860, if that occurs and if I can catch it on time. All right, and those are all the February trades. Let's take a look at the March trade. It's the March bearish butterfly. I started with 760s, and my reference point is 760. I was supposed to add at 800, and I did that. And I am currently, it's down a little money, completely expected, and this is actually going very well. My understanding is that I might have missed a delta roll on doing the on having the 760s, because I know one of my students emailed me today and said he actually rolled the 780, and now he's got a 780 800 on, which is telling me that I missed it, which is very possible because I've been playing around with my February positions and I wasn't really watching it. But even so, this position looks fine. I do not add to the position again till 820. So if the market actually creeps up, into this range, I'm going to have a delta theta problem, And at that point, I will do the delta roll. So I'll take the 760 off, I'll roll it to 800, and then when we hit 820, I'll add an 820. That's how that'll work, if that's the case. And of course, if it just shoots up here, I may just end up adding the 800 behind the market. We'll see how it goes. But either way, this is what, it's down 766, which, oh no, it's not. Hold on, let me fix this. It's down 516, completely expected with the type of run we've had under this lower volatility environment, and it's looking good. And that is a review of all the positions. I'm off skiing tomorrow, so I probably will not have a market update tomorrow, even if I do end up making a move, although most likely things are going to stay where they are. And I'll keep you up to date on either Friday or over the weekend on any moves for Thursday or Friday. That's it, and have a great weekend.